Good morning.
Bonjour, Jeff.
Hello, good morning. Can you hear me?
Yeah,
good morning, Joseph. Yes.
Okay,
Yeah.
good morning. Yeah. Good to see you all. Thank you.
That's right. Good to see you too.
Good morning, Mr. Tabi.
Yeah, Joseph, how are you?
I'm fine, thank you. And you?
I'm good.
Okay,
I'm good.
good to see you. So you're based here in Accra, Mr. Tabi, yeah?
Yes, I'm in Accra.
Oh, okay. We should arrange to meet.
I think so. Do you come for our sector working group meetings?
No, I
Okay.
don't. No, yeah.
Okay, yeah.
I
know
think
your other
someone from the
colleagues.
FAO country office comes.
Yes.
Maybe.
Yes,
Yeah.
that's true.
Yeah. Okay. Thank you.
Good morning, good afternoon, colleagues, and welcome to our webinar. This is the fifth in the series of these webinars. Today's webinar is under the theme Promoting Innovative Financing Mechanisms for Agricultural Mechanization in Africa. So it is the fifth in the team. We've had four previous webinars, all looking at different aspects of mechanization, agricultural mechanization in Africa. At this point, and without wasting any more time, I would like to invite Mr. Tabi Kakari, who is an agricultural mechanization expert with the African Development Bank based in the Ghana office. Mr. Kakari, I would like to invite you to give us the opening remarks, please.
Okay, good morning, Mark, and good morning, everybody. I'm sure that you can hear me. Firstly, testing to see that I can be heard. Is that okay? Okay, thank you then. I would firstly like to bring special greetings from Dr. Martin Fregene, who is the Director for Agriculture and Agro-Industry, Department of African Development Bank. He was originally scheduled to be the one to make the opening remarks at this August webinar, but he's also hosting another webinar, and he has asked that I should do this on his behalf. He asked me to communicate his regards and high expectations from the webinar. The head of Agriculture and Food Security Division of African Union Commission, Mr. Simplice Funkau, Executive Director African Conservation Tillage Network, Saidi Nkomwa, our highly placed keynote presenters, Christine Martinez and Karina Strachbach, our discussants comprising of Joseph Agwe from IFAD, Higwe Shewetstein from AGRA, Jeremiah Inhada from the Tanzania Agricultural Development Bank, and Mesa Diop from La Banque Agricole in Senegal. Distinguished participants, ladies and gentlemen, good morning or afternoon or evening, depending on where you are. It is my great pleasure to welcome you all to the fifth webinar in the series of webinars on joint actions on operations of the framework of sustainable agricultural mechanization, SF-SAMA. I wish to thank the organizers of this webinar, the FAO, African Union Commission, and the African Conservation Tillage Network for inviting the bank to give these opening remarks. Also, I thank you all for attending this webinar that will focus on important aspects of promoting innovative financing mechanisms for sustainable agricultural mechanization. I am also glad to note we have participants from the public and private sector, farmers, farmer organizations, investors, financial institutions, development partners, NGOs, researchers, and the academia, among others. This will help to create a participatory environment to discuss how financing could support development and promotion of mechanization in sub-Saharan Africa. Ladies and gentlemen, I am happy that today's main presentation is on promoting innovative financing mechanism for sustainable agricultural mechanization, and will focus on how adapted financial products can make a difference in the effects and our efforts to transform farming or agriculture in Africa. This is important since finance continues to be key in facilitating development and promotion of sustainable agricultural mechanization. It is worth noting that through this webinar, you would hear about different financing modalities that are recommended and or are being used to finance agricultural mechanization. Indeed, a good understanding of successful, innovative approaches will help in complementing how these approaches could be adapted in different countries in our quest to develop and promote sustainable agricultural mechanization. At this juncture, I would like to mention that I was personally at the forefront of promoting mechanization in Ghana in my previous work as an agricultural engineer with the Ministry of Food and Agriculture in Ghana. The mechanization story of Ghana is told to have heightened in the 1960s when we had state farms and state-run mechanization service centers. And later on in the 1980s, these were seen not to be sustainable. And as part of the structural adjustment program, the government devolved itself from direct involvement in mechanization. From then, there has been several attempts at promoting mechanization again in the country, the latest being the establishment of agricultural mechanization services enterprise centers. And at an appropriate time in the webinar, I am sure I will be able to share some thoughts based on these experiences. I understand that in addition to sharing knowledge from the international and regional perspectives, two banks based in East and West Africa will be sharing their experiences and innovations on how they are enabling smallholder, medium, and large-scale farmers, as well as mechanization service providers to access services. It gives an opportunity to learn more on what financing institutions are doing to support agriculture in sub-Saharan Africa. Ladies and gentlemen, the topic will be discussed from a wide range of perspectives, including international, continental, and country perspectives, and would benefit from the diversity, knowledge, and experience of the distinguished experts on the topic. We are indeed fortunate to have such experienced experts with immense expertise spanning both public and private sector, and we thank them all for agreeing to contribute. I do not doubt that this fifth webinar in the series will rekindle interest in the important issues on how to innovatively fund agricultural mechanization in Africa. I encourage us all to use the opportunity to freely share our views and support the shaping of our future. Let us all commit to playing our part in ensuring coordinated and sustainable mechanization in our spheres of influence. Ladies and gentlemen, on behalf of the organizing committee, I would like to once again thank all of you for participating. We at the African Development Bank are eagerly looking forward to the deliberations and recommendations from this webinar. You can be assured of our desire to increase the proportion of financing that goes to agriculture as a business, noting that Feed Africa is the second of the bank's high five priority areas. With these remarks, it is my pleasure to declare this webinar officially opened. Thank you.
Thank you very much, Mr. Tabika Kari, for opening our webinar on such a positive note for us. And I think it is also very appropriate that we have you opening this webinar. You indicated that you used to promote agricultural mechanization in Ghana, and now you are with the bank. So we are combining mechanization and finance, which is precisely our topic for today. So we are very grateful. Now, ladies and gentlemen, we have a very interesting 2-hour program for you. We are going to have a keynote presentation, which will be given by Dr. Christiane Stroh de Martinez and Corinna Strohbach, who are consultants with Joint Co-op from Germany. Now, after the keynote presentation, we will have 4 panelists who will share different perspectives on financing of agricultural mechanization in Africa. I will introduce them when it is time for them to speak. Then we will have an open session where questions will be taken and answers will be provided. Then getting to the end, we will have my colleagues, Joseph Mpagalile, and Nomathemba Mplanga, telling us about what more is to come in this webinar series. And we will have a closing remarks from another colleague from FAO headquarters. supporters, which I will introduce later on. We have an interesting mix of people who have registered for this webinar today. In fact, we had over 266 people who registered, coming from about 50 different countries, 34 out of which are in Africa. And these participants are coming from a broad range of stakeholder groups, from the public sector, private sector, NGOs, academia, civil society, and the rest. So it promises to be an interesting discussion. This webinar, the objective basically is to provide us with a platform to learn more about why innovative financing mechanisms are important for promoting agricultural mechanization and its services, especially for smallholder farmers. And through this, we will be able to share experiences and learn from each other. At this point, I would therefore like to invite Dr. Christiane Stroh de Martinez and her colleague, Corinna Strohbach, to give us the keynote presentation on promoting innovative financing mechanisms for agricultural mechanization in sub-Saharan Africa.
Thank you so much, for this really kind introduction. Actually, for us, it is a great honor to be invited to this conference and listening. Who is there? I'm actually really getting a bit frightened, but we brought you some ideas, and what we're really looking forward to is presenting them to you to really later on share what you think, develop together. What are really ways to finance this very important topic? So perhaps just a short note on ourselves. So I'm here with Corinna, I'm Christiane, and we both work at Join Group. And Join Group is a boutique consultancy in Munich, in Germany. And what we do is we focus on development cooperation, and what is kind of our motivation is always finding ways how we can involve all groups, from the farmers, the ministers, everybody in the field, in project design phase, in implementations, in evaluations, and finding new ways. And actually during this last pandemic year, there have been some really impressive innovation how we could use these virtual tools, like now getting together with all of you from so many countries. That's really a big gift that does technology to us. So I hand over to Corinna.
Yes, thank you very much. So good morning, good afternoon, good evening also from my side. It's a pleasure to be here. And now we've heard already so much about who is in that webinar that we are a bit curious of, okay, who is actually not only has registered, but who is actually here. And for this, we would like to invite you to a little poll. For this, I would invite you to take out your mobile phones and to use this QR code to scan, and then you will be able to access a poll. If that doesn't work with the QR code, you can alternatively also just type in www.menti.com with the voting code 63753059. And you can also do that with your laptop. That works as well, or with your computer. But I always recommend the smartphone because it's just a bit easier also with the QR code. So I just wait a moment for everyone to have the chance to take a picture. And then let's see. So the first question is, from which country are you joining today's webinar? And in here we see 9 people have already voted. From Germany, Zimbabwe, we have people welcome. Kenya, Tanzania, Italy, Nepal, UK, Myanmar. Who else is joining today's webinar? Let's see, from Senegal. Oh, I think there are several people joining from Zimbabwe, so it's in larger letters. Welcome. So in case you still need the code for the Mentimeter, it's written up here on the slide. So 63753059. And for those speaking French, it's written, when you type in the code, it's written in French. Okay, so I can see it's really a great variety, and I see not all people have yet voted, so we can expect that there are even much more people. I see in the chat, we have here South Sudan, Sierra Leone, Cote d'Ivoire, several times. That's great. Welcome to everyone. Then also interesting, which organization do you work for? I think we already heard there's really a great variety in different organizations. So where are you working? Oh, Hello Tractor, we have that example in, oh, IFAD, Agra, AgriMec Africa Limited, NLU, UNIDO, wow, it's getting so fast. The African Development Bank is here, welcome. FAO, HO Technical University, ACT Network, AKTC. Bahia Dar University. Wow, it's really impressive to see you. Very warm welcome to everyone, whether you are now here represented with the names or not, very warm welcome. Thank you very much for repeating in the chat. University of Greenwich, I see. Excellent. Yeah, very warm welcome to everyone. And since I do not necessarily know all these institutions, we also have the next question on then what is your connection to the subject of financing mechanization? Are you a practitioner, a researcher, a policy maker? You work for a development organization? Are you a consultant? And maybe there are also some groups that we forgot. You can also vote several times. So if you say you fit to more than one group, please feel free to also vote several times. I see a lot of people from development organization, but we also have policymaker and practitioners here. Very warm welcome to everyone. Yeah, the picture is getting clearer, but it's staying similar. Excellent. And then we have a final question to you, which is really related to today's presentation. What comes into your mind when thinking about financing agriculture mechanization? What are key words that you have in your mind? Sustainability, access, frictionless, accessibility to finance, the Grameen model, yeah. The Paris Agreement, collateral, yeah, we will see that. Collateral, definitely a big problem. Service provision, yes. Critical, oh, there's someone's critical with regard to that it's important but difficult. Talking about smallholder farmers, équipement, SDG 2, yes, definitely. Complication, grants, Yeah, wow, I think we have a great picture here. So it's a lot actually about sustainability, about access, about training. Yeah, very interesting. I also see loans here. Great, thank you very much for being open and for participating in that poll. Yeah, let's see what came into our mind when we were doing the study. Christiane, would you like to continue?
Yes, thank you so much. Actually, when we started studying the topic, which is now over like 5 years ago, I had this big thought about how can loans be made better, yeah, because I had quite a bit of experience with microfinance. I saw the loans not fitting, but kind of what is one of the central messages really of our presentation today and outcome of our research is that we should not look only at the loan. There are other solutions beyond loans that are really important, and for some of the target groups might even be better fitting than a loan. So let's go into that and see what we think in detail about it. First of all, I would just share very quickly our understanding of mechanization. So for us, mechanization should be really of different types of intensities and also sort of that, like from larger tractors to two-wheel tractors and all types of, or all degrees of intensities. And then we should always think about the whole value chain. So from transporting things to the market, working the land, but also plowing, sowing, harvesting, but also milling and processing the agricultural produce. So that said, what is kind of the main challenge of financing agriculture mechanization? As kind of all challenges to financial inclusion, we have to look at the demand and the supply side. And if we look at what farmers and agro processors need, there is lacking finance and business literacy on the one hand side, and also the problem of non-bankable collateral. On the supply side, what we often see that financial institutions naturally have like financial people of all different backgrounds, but very often they don't have agronomists, so no people with specific agriculture background, only if they already took that step into very dedicated agri-lending. And hence for the institutions where we don't see these the staff with agriculture knowledge, we see like an institutional hesitance of offering financial products, especially the ones like for mechanization that are more complex even. So when these challenges come together, we have observed in many countries, not even like even much beyond sub-Saharan Africa, a very limited adapted product offer for mechanizations for the group of bigger or smaller smallholder farmers. Then still a problem with repayment schedules, as lots of the mechanization is an investment that goes beyond the cycle of one harvest. If we don't look at multi-year cultures, so there is this problem of converting the different cycles of the harvest and the repayment of the mechanization tool. And as there is no kind of institutionalized fora where farmers and their organizations and financial institutions speak, we also have seen that it's difficult to resolve these challenges due to insufficient communication.
So what can be done about this? What can be solution approaches? And here we would like to present you a variety of approaches that can be there, a variety of options. They are applicable for different circumstances, surely, but let's have a look. So first thing first, if we talk about financing mechanization, one might first think about, okay, it is about purchasing. I've before read loans. Yes, and that's true. Purchasing and financing is very much related. However, we would also make a short note on the sideline that for us, financing is not always about purchasing, having a tool for your own, but it can also mean sharing in terms of jointly purchasing a machinery in a cooperative model or a fee-for-service model where you just pay for the service and not for the whole machinery. This has the advantage that, of course, obviously, the tool does not need to be purchased and also not maintained, or maintenance can be done in groups. On the other side, it has the disadvantage that there is competition for machinery, especially during certain short crop operation periods. I have two examples here, which I do not want to go into detail because I understand that Kyma has already been presented and Hello Tractor will be. So here, Kyma, it's a machinery ring, or it's a cooperative basically, where people jointly in a cooperative buy the machinery. However, still the cooperatives also may have the challenge to then access formal financing, but it's definitely easier. So joint purchasing and then jointly using machinery. Hello Tractor, we have here, welcome. Great that you're here. I think I don't have to go more into detail. It's quite well known, a fee-for-service model where people who have a tractor and people who need the service are brought together, like in a Uber model. So a win-win situation for both. So much on the sideline on the sharing, but also now let's go into the left part on purchasing. And here it's not, and that's maybe the main message for today, it's not only about financing, it's not only about loans, but there are also other options. And I would first like to highlight the saving option. Saving is a great financial instrument, especially for smallholder farmers with a lower income. It has the advantage that you don't have this big risk of having a loan, then you have to repay it, and it has lower costs, but it's not always suitable for larger investments. And here I would like to make it a bit more vivid by telling you a story of My Agro. And My Agro was founded in 2011 by Anushka Ratnayaki, who you can see here on the picture. She was working on agricultural financing, and several times had the encounter that people came to her and asked for a loan, but said, oh, we would like to repay the loan even in advance before we even get it. So she realized what they needed was actually not a loan, but a savings product, and they just used the loan terminology to express it. And then Anushka looked at what options are there and realized there's not really many good options for savings in rural areas, especially for farmers, and developed an innovative system which is basically based on these small stores that, you all know them. They sell, some food, drinks, but also phone cards, phone credit cards, where people can scratch and then have a code. And that's also how it is used for My Agro, for the company. Basically, farmer can open a savings account with My Agro, and if they have some small money left over that they would like to save, they can go to a My Agro store, buy a scratch card, and then the shop owner can type the code and thereby transfer the money to the savings account at My Agro. And with that, people can then buy seeds, fertilizer, also some tools. However, as you can see, it's not really so applicable for tractors or large machinery. What I told you here is on the slide, so you can read and look at that later. The second thing we would like to highlight as an option compared to financing is leasing. And when I looked at literature, I found that sometimes leasing and financing, asset financing, is mixed up. So just a reminder for all of us, what's the difference between leasing and financing? Financing means the agri-enterprise gets a loan from a financial institution, and with that cash then goes to a supplier, gets the equipment, and then legally owns that. To get the loan at the beginning, a collateral has to be provided. Financing is a bit different here. The financial institution basically pays the equipment supplier. The equipment supplier then delivers the equipment to the agri-enterprise, which can then use it, but it still stays in the ownership of the financial institution until it is fully paid. So, and the big advantage is no collateral is required, because the tractor, the machinery, whatever, is the collateral in that case. So in my opinion, a very promising approach, which is unfortunately rather new. However, compared to when we did the study in 2016 and today, I found that there are many more new leasing approaches in different African countries. So it's coming, but still a bit of awareness raising is still required. There are also many challenges to that. It means that the farmer has to well use the equipment, and it's still under the ownership of the financial institutions. So the financial institution has to monitor it with on-site visits. And another precondition is also that a secondary market is required for the leasing items that are not fully paid to sell. And this is also not necessarily always the case. I have an example here from EFTA, which is basically what I just explained, a leasing company. Here people can lease small tractors, harvesters with a 10 to 30% advance payment, 36-month repayment period, and monitoring visits are conducted, as I said, to see how the machinery is used every 3 months. So far from leasing, but also we should not neglect that financing is an option.
Thank you, Corinna. So when we look at financing, what is really important is to differentiate who are the clients, which type of, which degree of formality they have. So large loans for established agro businesses are generally, because these are kind of bank clients with good connections. When we go down to the very small clients, farmers with a very small farm, kind of rather informal way of managing it, they can be often very well served by microfinance. So for small mechanization investments, that might also kind of work very well. What is really for us kind of the missing middle is like medium-sized loans for smallholder farmer that wanna kind of professionalize, grow their farm, and here we face different challenges. Let's look at them. On the one hand side, there is this challenge that I mentioned, how to elaborate loans with adapted repayment cycles that often go beyond one harvest. So that's really a challenge. And then kind of going beyond one harvest, we have also a more distinct collateral problem, or kind of a risk problem to solve. And 3 different ways we would like to highlight to kind of tackle it. On the one hand side, contract-based securities. So here we have 2 types. On the one hand side, the farmer might be part of a value chain scheme. And in this case, the very strong relationships that are also kind of written down in contracts between the value chain participants, they can be used kind of as contract-based securities. However, this setup is often not so easy kind of to set up, and especially from the side of the farmer, it needs the one who organizes the value chain to do so. Another way is the warehouse receipts. Here also the farmer can use it, but still needs the offer to be able. And here we have an example from Malawi, ACE, which is the agriculture, the commodity exchange for Africa. And they have warehouses in different regions over the country. And here the farmers have on the one hand side the option to store the harvest in order to kind of go over the period of low prices and sell it to a better price, but then really use this receipt from the warehouse as a collateral for financing to banks. Another option are still joint liability groups, and here two different kind of ways of operating them are possible. The members, they might either purchase one mechanization equipment each and then kind of guarantee each other for it, or they purchase one together and then they use it together. And last but not least, insurance products, they cannot take away the risk, but they can kind of support farmers to lead with it. In different senses. So on the first one, asset insurance that can really cover the theft or the damage of the mechanization tool that is being purchased. So lowering the risk that this big investment has been made and then it's gone. And then on the one hand, so weather or other agricultural insurance, they can buffer a bit the risk related to the agricultural production, which is then important as kind of the whole business of the farm has also to be stabilized. And finally, the well-known credit life insurance that covers the risk of the farmer being seriously injured or dying. What we saw in our research that there's still relatively low insurance offer all over Africa, all sub-Saharan Africa for smallholder farmers, but there's a growing offer, and we would like to show you Acre Africa. They are kind of insurance intermediary or broker that really offer the farmers an improved access to insurance companies. So they are not an insurance, they are a broker or intermediary. Farmer can apply with Acre before planting, and then basically get a cover from them. And currently they active and already quite big in Kenya, Rwanda, and Tanzania, and they are growing also on the East Coast. So yeah, now we led you through so many different types of options how to finance mechanization, so how to get the resources, not only to purchase, but also perhaps to share the mechanization tools. And yeah, what we really wanted to make here as a point, that a loan is not the only and not necessarily the best solution. So now we have our mechanization tool finance, nice, but so what? Yeah, unfortunately, we still have to think one step further. We think because a good financial solution does not ensure just that, like, kind of the money flows to finance the mechanization item the farmer or the processor wants, but also goes a bit further and strengthens really the farm business. And why that? Because the consequences of mechanization and its financing are very different and very strong for some of the different types of farmers and processors. So if we look at kind of the whole range of different types of farmers and processors, from the commercial ones to the very small ones, we want to look at kind of this very large quantity of more or less bigger or smaller smallholder farmers. And here we think that it's really important that all people engaging like in promoting mechanization and getting it financed look at what it does in terms of change with the farmer's business. So because of the mechanization, farmers in smallholder farmers very often need to have an increased degree of commercialization in their farm. That means that they need to specialize a bit more, and very often also then kind of the direct production of food for family is being reduced, or just the diversity of producers reduced. And with this specialization, there comes an increased risk, because diversification is also a risk management pattern. Yeah, so I think we have to see what happens also in terms of business profile and risk management profile at the farm if we bring forward mechanization and its financing.
So let's summarize the main points that we made in that presentation. I think the first sentence now is pretty clear. We mentioned that a lot. Think beyond the loan as our first conclusion. So we say loans can work to finance agriculture mechanization, but they are not the only solution. Instead, we would like to invite you to also think about savings and leasing options. In any case, the products have to be adapted to the target group. So for example, by including cash flow based approaches. And when we talk about leasing, we think there's a great opportunity here, but there are many challenges still. So here, conducive regulatory environment and awareness building for leasing could really make a big difference. Then we need capacity building on both sides, so both on the side of the farmer to improve financial and business literacy, but also on the side of financial institutions to increase their capacities, their knowledge about how does agriculture work, so that they are also willing and motivated to provide adapted products. And finally, mechanization only, or financing mechanization, can only make sense if the mechanization as such makes sense from an environmental point of view, from an ecological point of view, and from a social point of view in the short and long run. So I hope we made you curious to also have a look into the study. When you get the slides, you can click on the picture of the study and then access it. It's quite comprehensive with more than 200 theoretical and empirical studies we looked into for the study. And we also added a slide here. If you would like to know more about Joint Coop, about the consulting company, then you can also refer to that or also contact us at any time. So much from our side. Thank you very much for your time and for your interest in the presentation. And we are very much looking forward to further discussions.
Thank you very much, Christiane and Corinna, for that very, very interesting and informative presentation. I've actually quite enjoyed it. I think you have made the points very clear that when we talk about financing agricultural mechanization, we are not only looking at loans per se. We should look at different options, which also include savings and leasing. And even when we look at the sharing option, also there is the cooperative model as well as a fee-for-service model. And that is very, very interesting. Another point I picked was that we should look at the whole value chain. So we are not basically talking about mechanization only on the field, but we are looking at the whole value chain. And you also made the point about looking at different levels or intensities of mechanization, very complex equipment, but also maybe basic machineries that can be used to promote mechanization. And crucially, that financing of financial products should be tailor-made to suit the specific needs of the actors in the value chain that we are looking at, including smallholder farmers. So thank you very much. It is a very interesting presentation, and I'm sure we will have some comments and questions coming from the participants when we open, when we give the opportunity for them to do so. Now let me bring in our panelists to also share experiences and also speak to what you have presented. So first of all, I would like to go to Dr. Jonathan Agwe, who is IFAD's lead regional technical specialist, rural finance and markets, enterprises and value chains for West and Central Africa. And Dr. Agwe, I want to ask you to tell us a bit about smallholder access to mechanization services. So we know that access to agricultural mechanization services for smallholder farmers is key to removing the drudgery and from agricultural production and improving productivity. Now we have heard of these, we have been shown the different options from the presentation that was just made. So from IFAD's perspective as an international finance institution, what experiences can you share with us in the context of ensuring smallholder access to mechanization services, please? Jonathan?
Yes, thank you very much, Mike. Can you hear me?
Yes, I can hear you. Please go ahead.
Good. Greetings to all of you. Greetings from Abidjan, Cote d'Ivoire, where it's a very nice, beautiful morning. Thank you, Christian. Thank you, Corina. And Norma, thank you for inviting me over. I really appreciate it. This is an area that is very close to IFAD's heart. If IFAD gets up every morning, IFAD is thinking of poor rural people. And this is actually the base of the income pyramid. So even when we are talking about smallholder agriculture, IFAD is even dealing with those very extremely poor smallholder agriculture. And to imagine that they need mechanization services, it's kind of thinking, but how do they get them? So IFAD has this approach where, like Corina and Christian mentioned, you need first and foremost to actually do a survey analysis. You need to understand what sort of mechanization services the poor smallholders in the rural areas need. So you demand, you make a demand analysis and make sure that you understand what gaps there are. And then you quickly think of the fact that if you introduce mechanization for these guys, they will probably overproduce more than they can consume. Therefore, you have to identify an outlet market for what they will be producing as a result of using mechanization services. So you take a value chain approach, you identify a market, which will be the off-taking market to absorb, buy whatever these poor smallholders will be producing as a result of the glut that will be triggered from using mechanization. I agree with the two speakers. You have to do a value chain segmentation. Look at what mechanization services are needed, upstream, production, post-production, processing, marketing, and even consumption. If you don't mind, there are some machines that help you in consumption. In the kitchen, for example, you have to blend a few agricultural products in order to make them available for your consumption. So yes, you have to look at the whole value chain, all the way from input supply to output and its consumption. So IFAD is very interested first to take the value chain approach, where you identify a market for which you will then produce. When you now go to the level of the producer, you make sure that the financial institutions who have been complaining about transaction cost, they don't come around complaining. What do? You put farmers, smallholder farmers, into farmer organizations. That is where you solve this problem of transaction cost. You put them into farmer organizations, and they're the ones who, if they are properly structured and professionalized, can actually access whatever type of financing that you need for the smallholder farmers who are its members. When it comes to mechanization, of course, we understand that you don't treat it in isolation. You have to make sure that whatever mechanization requirement you identify is included in a business plan that you are developing for that farmer organization. Remember, I'm running away from treating with individuals because we're dealing with very smallholder, farmers. I'm talking about groups, and I'm using farmer organizations in a very generic way. So when we put together business development services who help these smallholder farmers who are in cooperatives, farmer organizations, they develop a bankable business plan. We share the bankable business plan, which includes needs for mechanization, whatever types of mechanizations. You present them to a prospective potential financial institution who will be hopefully interested. If they find an interest in it, based on the fact that in the business plan that has been developed for the farmer organization, there are items in that business plan that are of interest to them to finance. Then they can quickly indicate that they are interested, provided you do a cost-benefit analysis in which you will demonstrate all of these cash flows that Christian and Corina have discussed. Financial institutions are very interested to know that there is going to be demand and the ability to pay back. So they look at the business proposal that you have submitted to them, they show their interest, and if they lack, appropriate products. I see the list of financial products that Christian and Corina have displayed. It's almost a comprehensive list. So financial institutions, in addition to loans, will be looking for the other financial products which will respond to the gaps that you've identified for financing, agricultural machinery for smallholders. If they don't find anything of interest other than loans, they will certainly tell you that we cannot finance. If a farmer organization is presenting a need for a lease and they cannot provide leasing services, they will definitely disown it. So I agree with the presenters that loans are not the only financial product. There is a series of products. So I am not going to repeat what Christian and Corina have said, but I will quickly go to what IFAD does. IFAD looks at the fact that savings are required. IFAD looks at the fact that subsidies are required. And do remember, there's no agriculture anywhere on earth here that is not subsidized. I hope this is not any new lesson for people who think, yeah, it's only in Africa where agriculture is subsidized. No, look at the US. You look at Europe. You see how many, tons and thousands of dollars are put into subsidies, but in a smart way. So IFAD has taken the smart approach to use subsidies to finance, contribute to financing mechanization needs. In IFAD, we've developed something called a tripartite cost-sharing mechanism in which the financial need is identified and quantified, and then to reduce the risk from the financial institution looking at financing 100% of the need, we, IFAD, always make sure they make a contribution in the form of a matching grant. In order to introduce responsibility and ownership on behalf of the farmers, we require them to make a contribution which will top the matching grant. So we call that matching contribution. Now we have two parts, resources that are in subsidy form and contribution from the potential beneficiary. And then we introduce these two resources into a bank as a savings for the farmer organization, which is supposed to apply for a loan. Once these two parts are introduced in a bank into a savings account in the name of the farmer organization, remember that the grant is to the farmer organization. All of this is called savings on behalf of the farmer organization. Then we tell the financial institution, now your risk exposure is reduced. You are no longer going to give 100% of the loan or whatever resource this farmer organization required. So we expect you to leverage on this savings and make the remaining contribution. So the grants can come in like 40%. Okay. The matching contribution can come in like 10%. and then the loan from the financial institution comes in to complete the other 50%. So we have 40, 10, 50 ratio, which is distributing and sharing risks across the various stakeholders and across that particular segment of the value chain.
Thank you, Jonathan. Jonathan, thank you very much. The time is actually against us. So if you can quickly wrap up, if you can quickly finish your point, then I'll move on to...
two seconds. Okay. IFAD has introduced this innovative cost-sharing mechanism in which all stakeholders are crowded in and giving responsibility to the farmer organizations. And with respect to the mechanization, again, it does not matter which machine is required. The same approach applies to all types of machines and all types of services that are needed by the smallholder, farmer organizations. Thank you very much.
Thank you. Thank you very much, Jonathan. This is very, very interesting. So from IFA's perspective, you are also emphasizing the value chain approach. Look at the markets where the produce that will come out of the mechanization will be sold. So an outlet for what will be produced. You conduct a demand analysis. And critically, your tripartite mechanism where you provide matching grants to accompany the contribution from the borrower together with a loan from the bank is very, very interesting indeed. So thank you very much for sharing that with us. I'm sure there will be questions to you when we open the session for people to ask questions and also make further comments. Now, let me move now to our panelist from AGRA. So we have Hedwig Sivertsen, and we would like you to share some experiences on the link between financing and the use of digital platforms to provide solutions for increased smallholder mechanization in Africa. I mean, we know of some examples in Africa of the innovative use of ICT tools for tractor hire services here on the continent. So it will be interesting to learn about the link between financing and the use of such digital platforms to boost agricultural mechanization. You have the floor, please, Hedwig.
Thank you, Mark, for this kind introduction. So my name is Hedwig Sivertsen, and I work for the Alliance for Green Revolution in Africa. I'm based in Nairobi, and I cover the 11 countries that AGRA works in, which are in West Africa, Eastern Africa, and Southern Africa. Over the past 5 years, we've invested about $1.5 million, thanks to a program with MasterCard Foundation, to support innovations in the business models and financing of mechanization, and to make sure that smallholder farmers can access mechanization. So to go back to the presentation of Christian and Corina, I think we have been merging the sharing and the purchase angles, because what we have focused on is to support SMEs, companies, farmer-based organizations, bigger farmers, to invest in equipment for the purpose of renting it out to smallholder farmers. So that's a combination. And I think also to your financing options, I think we have been combining the three. And I think if we listen well to Jonathan, I think he also says farmers save 10% to give their own contribution to the financing. And then there's the matching grant, and then there's the loan of the bank. And then often the asset is pledged as collateral for the loan. So that in fact is like a leasing. And I think we've done all of that, right? I think that is the model. I just for the model of Jonathan, I would like to add a third party that shares risk. And that's what we have been applying. And that's the vendor, right? Because the vendor is a big beneficiary of this type of schemes because they can sell more tractors or more equipment. So what we have been doing is to withhold 10 or 20% of the price of the equipment by the bank and only pay that to the vendor after the warranty is over. And that is to tackle the problem of equipment not being serviced, being parked because spare parts are not available, or the downtime of the tractors is often a big problem. I think we all know these pictures of district offices or mechanization centers where the equipment is parked because there's no spares, there's no mechanics that can repair the tractors. So we want the vendors to be responsible for the after sales services. And we can only do that by withholding the payment. So I think that's another, on top of Jonathan's model, I think that's another innovation we've been working on. Then maybe on the subsidy part, I wanted to say something about that. We also deploy matching grant schemes to reduce the risk for the buyers to invest in equipment. But I think we need to be very smart about this, right? I mean, we need to justify why a subsidy is required. And in the case of tractors, we've been really able to show that the business case for the investments in a tractor is very good, right? In Tanzania, you can easily pay a tractor within 2 years just by renting it out. And that is what we have been proving. So I think we shouldn't be subsidizing things that have already a proven business case for the buyers and for the vendors and for the banks. And so in Tanzania, we are now at the point, we've worked with ETC Agro, TADB, I think present here, TPB, NMB, CRDB, all kind of banks are now in fact queuing to finance tractors because they know that it makes sense and that with the logbook as a collateral, so that is what I think you refer to in the leasing arrangements, is that the bank withholds the logbook as a guarantee. That really helps to de-risk the bank's exposure to financing tractors. Now, let me come to the digital. I think the digital is really a very important thing you can use to de-risk investments in equipment. So what does it do? I think the first thing is the trackers in the tractors, right? We can now see if you put a Garmin in the tractor, you can see where the tractor is. And that is very important for owners that are not the operators, right? A big problem of people investing in tractors is that they don't know where these tractors go, what jobs they do, what the operator is doing, etc. Right? There's a lot of loss of income because the operators put it in their own pockets instead of giving it to the owner. So with these Garmins, we can track, or the owner can track, where the tractor is, how many kilometers it does, how many hectares it has worked on, what the fuel consumption is, another very important one. And even if the bank would want to do that, I mean, the tractor can be switched off, right? So that is a very strong thing. In case of people not paying, you can switch it off. So I think that technology is key. And I think the cases we have worked with in Tanzania and Ghana, we worked with Trotro Tractors, is our partners, and Agro Africa is the equipment vendor. And in Kenya, we worked with Hello Tractors. I think that the possibility of tracking where the tractor is, what the fuel consumption is, etc. So if you have that information, and that's what Hello Tractors did in Kenya and Nigeria, is to use that information to present the business case, like how profitable is it, right? How many hectares can you do in a day? How much fuel is being used, etc. And that's extremely important information, return on investment for the financiers to understand what is it that you need to invest in and how much money you can use. And so, for example, Hello Tractor has proven that if you invest $34,000 in a tractor in Nigeria, you can pay it back in 2 years. So that is the return on investment analysis they do based on this tracker. Now, I think the other very important digital innovation is the demand aggregation. I think some of you mentioned it already. Smallholders are scattered all over the place. So if you want to move your tractor from one smallholder to another, and that takes 10 kilometers, of course, you lose the whole value of giving the services. So that's where the Uber for tractors, for those of you who know Uber, but it is a possibility for farmers to ask for the services, and then the operator or the owner can aggregate demand and go to the areas where there's enough demand. So Trotro is doing that in Ghana and now also in Zimbabwe and in Togo and in Nigeria. Hello Tractors is doing that in Nigeria and Kenya, and ETC Agro in Tanzania, and soon in Rwanda. So this is really upcoming. It has all kind of glitches and hitches, and that's why we have invested in it as Agra, because farmers are digital, not very literate. Connectivity is a problem. So it's not solved, right? But I think it's very promising. And that strengthens the business case for the people investing in a tractor. Because if they can aggregate demand through this device, then the business case becomes much stronger.
Okay, Edwig, if you can conclude, please.
Yeah, no, I was to conclude. So I said this is all so digital can de-risk and strengthen the business case in terms of demand aggregation and in terms of monitoring the tractor, which is really key important elements which help also to increase access to finance, right? Because the access to finance is sometimes difficult because the risks are not managed well. So this is, I think, good additions to what Corina and Christiana have presented. And maybe if I can make some publication for our own webinar, which will take place on 8 June, where we will go very deep in all of these 3 partnerships that we have been running in the past 5 years. 8 June, so welcome back to another nice webinar on mechanization. Thanks for all the good contributions from everybody. Back to you, Mark.
Thank you very much, Hedwig, for that interesting contribution. So essentially, you've also given us concrete examples from the different options that Christian and Corina highlighted, and how you're supporting different countries on the continent using these different options. And with the digital side, the issue of putting trackers on these tractors so you can actually monitor how they work, as well as aggregating the demand, which also makes the provision of these services more efficient, is very well noted. And Hello Tractor and Trotro Tractor operating in different countries are interesting examples which make it more attractive for financial institutions to come in to finance these operations. Thank you very much. Now, let me go to our 2 other panelists to give us some perspectives from country level. So we have 2 representatives from Tanzania and Senegal going to share the perspectives from country level. So first of all, let me go to Jeremiah Mada, who is the zonal manager, Eastern Zone of the Tanzania Agricultural Development Bank. Jeremiah, so my question to you is that, yes, we know that the Tanzanian Agricultural Development Bank is a state-owned development finance institution specifically for agricultural development in Tanzania. So we are interested to learn about your experiences in promoting agricultural mechanization in Tanzania, and what recommendations would you have for other countries in Africa in general, or even East Africa in particular, but Africa in general. Please, you have 7 minutes.
Okay, thanks. I think I'll start in by saying that us as TADB, we have developed models, we have developed products, and we have incorporated partners who are basically doing a very good intervention in the mechanization space. And before I get into details, all of that, our key priorities are post-harvest management, input finance, and farm organization. Now, post-harvest management, we focus on light industries and storage, warehouse, and cold rooms. And in input finance, this is where we deal with mechanization, agri-input, and things like irrigation. For farmers organization, we deal with outgrowers and nucleus farm. So mechanization is one of our key priorities for TADB. Now I'll start with the model we have developed. We have developed what is called integrated value chain financing model, where we connect the production, aggregation, agro-processing, logistics up to the markets. And now later on, I will give an example of a project which we finance. It incorporates everything. With regards to products, we have developed a tractor loan. It's a mechanization loan under the asset financing docket in our product booklet. And basically, what Matractor Loans does, we have got partners in that space. We have partnered with John Deere and Ron Agro, and we have created the cheapest loan in the market in terms of cost of funding. Tanzanian markets interest rates with regards to loan start from 18 to 20, around to 22%, most of the banks and commercial banks. But we have been able to create a product which the cost of funding ranges between 14 to 8% and flat rate of 9%, emphasis on women, youth, and government employees. So with that product, we have been able to for say 2020, say last year, we have been able to give 65 units in the market. That is, we started this product around September 2020, but we've been able to disburse 65 units in the market, and it's doing quite well for 2021. But also, let me discuss, I've told you we've developed models, products, and we have incorporated partners. With regards to Matractor Loan, there is John Deere and Ron Agro. These are the suppliers we have chosen. Others are coming on the fold, people like Agricom, the suppliers of Kubota, ETC, the suppliers also of Kubota are coming along, so they want us to develop a product which will be basically a reflection of Matractor Loan. And this loan is not all, it's just not, we're not targeting only to make it cheaper in the market, but it has other benefits. The suppliers, the John Deere, through the partnership, we have been able to the partners have been able to create what we call a buy down interest. So for each deal, for each disbursement, they will be buying interest, especially for smallholders, ranging from 4 to 1%. Yeah. So we have created a product which is costs. It's affordable, and in terms of de-risking the product through these partners, we have agreed to have a buyback guarantee contract. When our farmers default, they will be the first to buy back the tractors at different rates. So there is also a warranty in place, where a warranty is set, to maintain the tractors for 1 year for free, and then the rest, the farmer will start, using his own cash flow to maintain all this, the tractors. So these are kind of benefits we have introduced in the market, especially for smallholders, to reduce the cost of funding, and also to reduce the cost of maintenance these tractors. But now I'll give an example of a project where we finance 19 farmers in a location called Narakao in Simanjiro.
Please summarize that and conclude because of the time, please.
Okay, thanks. So basically what we have done, you see we finance a different segment in the market. But for this webinar, I think I should start with how we finance smallholders. We tend to finance smallholders in groups where the integrated value chain financing model can work. So we have financed 19 farmers with John Deere tractors at lower rates. Yeah? The total area under cultivation was like 16,000 acres. 10,000 acres was for maize and 6,000 acres was for beans. We linked these farmers with input suppliers to provide seedlings and fertilizers. We also, on our ecosystem, have linked these farmers with an off-taker for both beans and maize. So the market is assured, and there is involvement with local government authority on that area. So we can help, like, agriculture officers from the government, extension services officers. But key, we have put a project administrator, us and the partners, the John Deere and the Lone Agro. We have employed a project administrator who will be responsible to guide the farmers on best practices from planting to harvesting and coordinating basically the entire project. Offer training such as entrepreneurship, insurance, financial budgeting. Our main aim when we finance these projects, because for us, it's not only loans. The integrated value chain financing model is basically a project. So our main aim, the impact is to increase production, increase the household, the income of our people, especially smallholders, transformation through mechanization from subsistence farming to commercial farming, and capacity building in terms of training and, farming best practices. So basically, in a nutshell, that is what we have done.
Thank you very much, Jeremiah, for sharing that interesting example also from Tanzania. Again, you are re-emphasizing the importance of an integrated value chain financing model, which then ensures that the financing becomes sustainable. You mentioned the linkages you have with different suppliers, and also financing smallholders in groups and providing different services. So thank you very much for that experience. Let me now go to Senegal. And I would like to bring on board Marcel Diop, who is the commercial supervisor, Northern Zone Bank Agricole, Agricultural Bank of Senegal. And Marcel Diop, for you also, we know that Senegal has had an interesting history of financing the rural economy in the country with different policies and interventions until the creation of the Agricultural Bank of Senegal. So how has the creation of this bank facilitated the financing of agricultural mechanization in Senegal, please?
Merci beaucoup, j'espère que vous m'entendez. Je m'appelle Marcel Diop, comme l'a si bien dit Marc. Je vais très rapidement vous faire une présentation de la Banque agricole et nos interventions sur toutes les chaînes de valeur. C'est vrai que le temps est très limité, donc je ne vais pas entrer dans les détails. Mais juste d'emblée préciser que la Banque agricole est créée par l'État du Sénégal en 1984 avec ses partenaires au développement. Et aujourd'hui, notre mission principale, c'est financer toutes les activités du monde rural, de l'agriculture, en passant par la pêche et l'agroforesterie, mais également l'élevage, et toutes les phases de la production jusqu'à la transformation. Donc aujourd'hui, nous intervenons sur toutes les chaînes de valeur agricole, sur le riz, sur la tomate, sur l'oignon et la pomme de terre. Et maintenant, plus particulièrement sur le financement de la mécanisation, d'emblée, il faut savoir que dès la création de la banque, nous avons négocié une convention que nous appelons financement de la production agricole avec l'État du Sénégal. Et Corina nous a précisé aujourd'hui le financement de la mécanisation achoppe parce qu'il y a une absence de garantie. Donc c'est pour ça que nous avons signé cette convention où l'État a mis à notre disposition 3 instruments. Le fonds de garantie qui permet aujourd'hui à la banque de financer les producteurs sans demander de garantie. Donc on l'a dit, l'absence de garantie pose problème pour l'accès au financement des producteurs. Donc c'est le fonds de garantie de l'État qui nous permet de financer les producteurs avec une couverture de 75%. Nous avons également le fonds de bonification qui nous permet aujourd'hui de diminuer le taux d'intérêt parce que nous l'avons dit, hein, aujourd'hui également le problème de l'accessibilité du financement, c'est parce que le coût du financement coûte relativement cher. Donc il va falloir mettre des mécanismes pour alléger les conditions de financement. C'est pour ça qu'effectivement que nous avons négocié avec l'État ce fonds de bonification qui nous permet aujourd'hui de financer avec un taux d'intérêt de 7,5 et le différentiel de 5% et c'est porté par l'État du Sénégal. Nous avons également mis en place ce qu'on appelle un fonds de calamité que l'État du Sénégal a bien voulu mettre à notre disposition. Et aujourd'hui, ce fonds de calamité est en train d'être remplacé progressivement par l'assurance agricole parce que également nous avons mis en place au Sénégal la compagnie nationale d'assurance agricole du Sénégal, la CNAS, et tous nos producteurs souscrivent au financement à l'assurance agricole. Et aujourd'hui, notre porte d'entrée, c'est pas seulement la personne physique, le producteur, c'est l'organisation. C'est pourquoi aujourd'hui au Sénégal, les producteurs se sont réunis pour créer des organisations paysannes, ce qu'on appelle des GIE, des groupements d'intérêt économique, mais également nous avons des sections villageoises, mais également nous avons des unions hydrauliques. Et aujourd'hui, notre modèle de financement, surtout sur la mécanisation agricole, nous ne donnons pas les fonds directement aux producteurs. C'est pour éviter tout ce qu'on appelle détournement d'objectifs. Donc nous avons aujourd'hui un modèle que nous appelons modèle de financement par BLP. Je ne sais pas, est-ce que vous voyez un peu l'image. Donc c'est des papiers comme ça que nous préparons. Si la banque accepte de financer le producteur, on lui donne ce papier avec toutes les caractéristiques requises et c'est ce papier-là que le producteur va déposer au niveau du fournisseur pour avoir le matériel. Et sur ce papier-là, il y a le cachet de la banque également et la signature du responsable pour montrer que la banque a accepté de financer ce producteur. Et le paiement est effectué directement sur le compte du fournisseur. Donc nous, on ne met pas l'argent à la disposition du producteur pour éviter tout ce qui est détournement d'objectifs. Donc nous mettons l'argent sur le compte du fournisseur et nous ne payons pas tant que le matériel n'est pas sur place et réceptionné par le producteur. Donc ça permet aujourd'hui de mettre en place un cercle contrôler, un cercle où le producteur ou bien le fournisseur n'auront pas la possibilité de détourner le financement. Donc là, c'est le premier modèle que nous avons mis en place avec l'État du Sénégal, mais également il y a la subvention de l'État. Parce que, comme vous le comprenez, hein, nous avons un programme d'autosuffisance en riz depuis 2012 et aujourd'hui, le problème de la mécanisation a été mis sur la table pour augmenter la production agricole. Et dans ce cadre-là, l'État a subventionné du matériel, mais c'est une subvention encadrée. Donc aujourd'hui, l'État subventionne le matériel à 70% et le différentiel de 30% est financé par la banque agricole. Donc ça permet aujourd'hui à ces producteurs-là bénéficier de la subvention, d'avoir une contrepartie, la partie non subventionnée à partir de la banque agricole, mais avec un taux d'intérêt de 3%. Donc nous avons beaucoup également joué sur le taux d'intérêt pour faciliter l'accès. Nous avons mis également un autre modèle avec la fondation chez Genta pour le développement durable, ce qu'on appelle le modèle des semences. C'est un peu comme les CUMA. Les semences, c'est les centres d'exploitation de matériel agricole, qui sont des structures indépendantes créées par les producteurs qui recrutent des gens qui gèrent le matériel et chaque producteur qui a besoin d'une prestation s'adresse au SEMA pour avoir la prestation pour, si vous voulez, faire tout ce qui est façon culturelle au niveau de sa parcelle. Donc ça, c'est un autre modèle. Nous avons également mis en place ce qu'on appelle les lignes de financement, parce que le problème des institutions financières aujourd'hui, il faut également le préciser, c'est le problème de ressources, surtout des ressources longues. On a parlé des financements qui ne sont pas adaptés parce que la durée c'est peut-être sur 1 an, 2 ans, mais avec ce modèle de financement que nous avons négocié avec des partenaires, nous avons eu l'accompagnement de l'AFD avec un financement de 10 milliards de francs CFA ce qui nous a permis aujourd'hui de financer la mécanisation agricole avec des ressources longues. Aujourd'hui, nous finançons avec des durées de 5 ans, 7 ans, et également avec des échéances annuelles. C'est-à-dire le producteur aura la possibilité de faire 2 campagnes avant de payer l'échéance. Donc ça également facilite le remboursement du crédit, mais également, comme l'a souligné Corina, je pense, nous avons également mis en place le crédit bail, le leasing aujourd'hui, et qui est en train...
Mr. Diop, please
Oui.
Summarize and conclude.
Merci beaucoup. Donc, voilà, merci. Donc, comme je l'ai dit tantôt, nous n'aurons pas le temps malheureusement d'entrer dans les détails, mais je pense que la prochaine fois, nous aurons l'occasion, en tout cas, d'avoir l'occasion de pouvoir discuter plus amplement sur ce que nous faisons sur le financement rural et plus particulièrement sur le financement de la mécanisation. Je vous remercie.
Okay, thank you very much, Marcel Diop, for that experience that you have shared from Senegal. We couldn't quite get everything that you said, but I got some points, such as also emphasizing the issue of financing the entire value chain, also having 3 instruments, a guarantee fund, a fund to also reduce the interest rates. You also mentioned the issue of financing farmer organizations, so not individual farmers, but farmers in groups, as well as having a model, a financing model, which ensures that the monies go directly to the supplier and not to the farmers. And so then the suppliers will be able to provide the machines required. I think what is also interesting is the point about providing long-term financing, resources for long-term loans, which is also critical. And I think you also mentioned that there is a facility which provides 70% subsidies to farmers, and then your bank provides the remaining 30% as a loan at very reduced interest rates. So these are very interesting experiences that you have shared. Please, you may put additional points in the chat since we missed 1 or 2 of the points. I think we got most of what you said, but you may also put additional information in the chat so that the other participants can benefit. So thank you very much for that experience. Colleagues, it's clear that the experiences that we have heard from our 4 panelists have gone to support what Corina and Christian presented in terms of the different financing options available to finance agricultural mechanization. And we have gotten a better understanding and also practical experiences from the field. Now, at this point, let me open this session to all of you to ask questions and make contributions. So please use the button to raise your hand. At the bottom of your screen, you see a raised hand. You can click it to raise your hand, and I'll call you to ask your question to any of the keynote presenters or the panelists, and then they will provide the responses. Please go straight to the point because we don't have much time. So when you have the opportunity, just go straight to the point and ask your question or make your contribution. I don't see any hands up yet. Who wants to ask a question or make a contribution?
Mark, there are 3 hands which are up. There's Silga, Infinix, and Yakuba.
Okay, for some reason I cannot, okay, yes, I think now I can see it. So Silga, let me go to you first. Please go straight to your point and ask your question or make your contribution. Silga, you have the floor, please. You are muted, Silga. I think you're muted. Okay, as Silga tries to sort out the audio, let me go to the person who is described here as Infinix. Please ask your question.
Oui, merci beaucoup. Oui, merci beaucoup de m'avoir accordé la parole. C'est monsieur Adjibi Latifi du Bénin. Bon, j'ai bien écouté les interventions de Christiana et de Corina. Mais le vrai problème, le vrai problème de financement, moi, je pense bien, c'est le retour des investissements. Mais il est à noter que dans nos pays aujourd'hui, c'est vrai, on a plusieurs modèles de financement de l'agriculture. Mais par rapport à la sécurisation des équipements mis à la disposition des paysans, plusieurs équipements ne sont pas souvent à la portée des gens qui l'utilisent et ils provoquent rapidement la destruction. Donc, les ressources humaines contribuent aussi à la sécurisation du retour d'investissement. Mais sur le panel, je n'ai pas vraiment des informations sur l'accent mis sur les ressources humaines dans le cadre de l'exploitation de ces machines. Parce que si je prends le cas du Bénin, il y a beaucoup d'investissements, il y a beaucoup de modes de financement, mais il s'est avéré que ces équipements sont mal utilisés et que le retour d'investissement est difficile du fait du manque de services de mécanisation, de services d'appui à la mécanisation et du fait que les ressources humaines sont vraiment très limitées de qualité. Donc, moi, je pense bien dans le financement de la mécanisation agricole.
All right. Okay. Thank you very much. I think your point is made.
Il faut aussi mettre un accent sur l'environnement.
You are making the point about return on investment and the importance of human resources for the use of these equipments to ensure that there is a good return on investment. Thank you very much. Let me go to Yakuba, please. Go straight to your point, Yakuba. Yakuba? Okay, let me go back to Silga. Silga, are you there now? Are you able to speak?
Mark, I think colleagues from the language center should unmute people who are asking questions. Yeah, they can't unmute themselves.
Okay, so we need assistance to unmute the people who have raised their hands to speak. So now I see Yakuba, you are able to speak. So please go straight to your question. Be brief, please.
Hello. Ok, moi c'est Karambega Yakuba, ici du Burkina.
Yakuba, I cannot hear you.
Voilà, et ok. Ok, donc merci de la parole. Je suis...
Yakuba, your audio is a bit of a challenge. Okay, I cannot hear what Yakuba is saying, so I'll kindly ask you to put the question in the chat. Yakuba, please put your question in the chat because we cannot hear what you're saying. And therefore, I'll go to Ola. Ola, please ask your question. Ola. Sorry, it's Ola Hanmi. Ola Hanmi, please ask your question. Please unmute or hand me. Yes, please go ahead. Okay, I think we are having still some challenges. For those of you who are not able to ask the question through audio, please type the question in the chat and then we will refer to it. But now I see Valerie. Let's try Valerie. Is it Valerie or Valère? Yeah.
It's Valère. So thank you for giving me the floor. Through the presentation and the interventions, I may sense that most of the mechanization which is about is rather tractorization. And we know that agriculture mechanization is not only the tractor. So I would say, can we have something above that? Can we have something from the interveners, maybe a word or two, an example, or
okay,
how
I think,
other are put
there is
in
an
place?
issue
Yes.
with the audio of the
yes.
participants, and it's very difficult to hear what you ask. So Valère, again, I will also ask you to put your question or comment in the chat, unfortunately. Apologies for, this challenge.
I was saying that it is rather tractorization.
Right, so let me see what we have. Whether we have anything in the chat in terms of questions. No, not yet. Okay. Right, okay, let me try Engineer Rajab. Rajab, please ask your question.
Thank you for all presenters. Thank you for all presenters. But I wanted to hear about what is the connection of what we have sustainable agriculture mechanization with research, because I didn't hear any presenter who touched the research part. So I want to know how we can link this, because our farmers can have good technology, they can have good mechanization, they can be aware, but what about the research? What about the research part? Because we need to have good product and high product or high production to that sector. So we need research part. One of the speaker can contribute anything about the research part. Thank you.
Okay, thank you, Rajab. Unfortunately, I could not hear most of what you said. Please put your question in the audio. Sorry, in the chat. Put the question in the chat because unfortunately I could not hear you. And I see in the chat that Valère was audible, but unfortunately I couldn't hear what Valère was saying also. Let me make one more attempt and go to Ludovic. Ludovic, please ask your question or contribution.
All right, thank you. Hope you are getting me.
Yes, I can hear you.
Oh, all right. Yeah, actually, my question is this. In fact, it's more of a, the question is not straightforward, but I hope you are going to help me in that. I wanted to know the aspect. Have we had any? Maybe the question is to all the participants. Any model of financing that takes into consideration, because what we have been talking about, I'm saying we're emphasizing mostly on tractors. But do we have financing models that are taking into consideration the various mechanization aspects such as tractors, animals, and also manual labor? Because we want to know if there are models that, for sure, there's some models that can be working in some part of the country with regard to the social reality that we have in there. But in other areas, we can't use the same type of models. So I want to know whether, for instance, we're talking about payload tractors and some other type of models. Have these models been experienced in different environments or to be able to be replicated in our own environment? That's something I want to know. And if it's the case, that is how have they been able to proceed? Because I was thinking of a system like franchise, whereby we have models of mechanization that have been able to give a positive results, that can be reproduced in different environments while respecting the framework of the creation of that model. I want to know if we have such model existing, and how have they been financed, and how can they be implemented in different environments?
Again, it was quite difficult to fully hear the question, but I think your question had to do with whether we have different models which are being tested in different environments and which can be replicated in different environments.
Yeah.
Yeah, okay. Thank you very much. I think unfortunately today, I don't know what the specific issue is, but the audio from the participants has been quite poor. And so I have not been able to pick up most of the questions. So let me come back to our presenters and the panelists on the two questions that I think I heard from what came up. The first one was about return on investment, and therefore the need for maybe capacity building to ensure proper use of the equipment, to ensure that there is some return of the investment that is made in acquiring those equipments and machines. And also the last one, which is about different financing models which have been tested in different environments and which can be replicated across the continent. So let me go back to our panelists and
maybe Mark.
Yes.
Maybe before that, can we ask all participants to mute their mics because there is an echo? I think some mics are on. Can you please mute your mics? Thank you.
Okay. Please kindly mute your mics now, because we are getting some feedback. So thank you very much for muting your mics. Okay, so now back to our latest panelists. Who wants to go first? If you heard something from from the participants in terms of the questions that they were trying to ask, it was difficult to hear. Do I see anyone who wants to?
Yes, it's Jonathan. Jonathan hand is on. Yeah.
Okay, Jonathan, please go ahead.
Thank you very much, Mike and Joseph. I will attempt 3 quick questions. The one on from Phoenix on returns on investment, which he's particularly directing to the need for some sort of capacity for people who manipulate the machines. What IFAD has done is IFAD identifies training centers where mainly youths can actually go get training on how to manipulate different machines that are bought or are accessed for tractorization, mechanization services in various countries in West and Central Africa. The center is in Songhai Center in Nigeria. Many of you might know that, and with its branches around West and Central Africa, they provide different types of training, particularly for people who are interested in either maintaining or using different machines. So this training, capacity development is always part of our de-risking, responsibilities of a typical value chain in which machines will be used. So we do this very often from training centers. There is a question on the chat on land titles and access to finance. In fact, where we have trouble is in the rural areas where you can have a land title, but the land is of very little value to financial institutions. And they will not give you loans based on your land title. They will give you loans based on the profitability of a business plan that you have submitted to them, in which business plan you find some sort of machine. If the cost of the machine and its productivity is included in the business plan, the financial institution giving you some sort of financial service will look at the profitability and not the land title. The last question, I just want to make sure I answer the last question, then I give over to the other. The one on agriculture versus research, I also indicated that by the time a smallholder farmer, a farmer organization, is looking for some form of mechanization, which is going to help them produce more, there should already be in place good agricultural practices, many of which have been inherited from research stations. When you're talking about high yielding varieties, when you're talking about climate resistant, drought resistant, flood resistant, all of those technologies have been researched and transferred onto farmers through farm trials, and then that's what they take and put onto their business proposal before submitting. The aspect of research was probably quiet, but it is there. Good agricultural practices constitute part of de-risking the value chain. Thank you. Let me leave that space.
Thank you very much, Jonathan, for highlighting the issue of the capacity building, especially that goes with also the operations of the machines and the link to the return on investment, and also the important question of research that you have highlighted. Okay, any further contribution? Did I see a hand here? Yes, Christiane, I see your hand. Please go ahead.
Yeah, thank you very much.
I cannot hear Christiane. Can you hear Christiane? Hello? Hello?
No, we cannot hear. No, we cannot hear her.
Okay, Christiane, we cannot hear you. Yes, we cannot hear you. Unfortunately. Okay. Right. Let me now come back to let me come to the chat to see what other issues have been put in the chat. I think I'm seeing the contribution from Pascal, which is saying that what we need is working. And one, we need business models, public-private partnership based. We need centers of excellence for mechanization services that are value chain complete, linked to markets. Yes, I think that point has been made. We need innovative financing models that we are talking about here. And we need climate smart villages run by committees that promote conservation agriculture and build up communities of practice for long-term sustainability. Yeah, Pascal, thank you for that contribution. I think quite a number of the points you make here have also been made by our keynote speakers and the panelists. And Adama Taoko, thank you also for your contribution highlighting some of the points, value chain approach, knowing the actors better to enhance the feasibility of the financing models that are promoted, adaptability. Again, you're emphasizing the research question, and also the point about where the money comes from. So yes, not for profit, including governments and CSOs. Okay, Christiane, your hand is up again. Let's have another go to see whether we can hear you this time around. Please go ahead.
Thank you so much. And I'm sorry for what happened. So what I wanted to say that I think if any, it's a very important topic, research partnerships. So I think especially applied research is really important. And whenever practitioners, institutions who want to make a change, like from the agricultural side, from the financing side, when they want to do something new, I think it's great if they can perhaps enter in partnership with research institutions, and then kind of get that support for monitoring what is really happening, what is helping people and their businesses and what not. Actually, our study was also financed by Research Institute in Germany, and what a discovery we made there is that really between agronomists and financial sector people, even researchers and practitioners, there had been kind of really a big gap. So it was good to and thinking. Thank you.
Thank you very much, Christian. So now we could hear you loud and clear. So I would like at this point to thank all of you, Christian, Corinna, but for a very informative and interesting presentation. Our 4 panelists for the rich experiences that you have shared, buttressing some of the key points that came out from the keynote presentation. All the materials will be shared on the Africa Mechanized website, colleagues, so you have more information on this webinar from the Africa Mechanized website. Let me invite at this point my colleagues, Joseph and Norma, to tell us briefly about what we have in store for you in relation to these webinars on mechanization. Joseph.
Okay, thank you so much, Mark. I'll be very quick because unfortunately we have run out of time. So we just wanted to thank all participants for the webinar today, and to inform you that the next webinar, webinar number 6, will be in June next month. And this one will be a moderated workshop to develop problem tree and objectives for a shared sense of understanding, purpose, and actions contributing to the framework for sustainable agricultural mechanization in Africa, talking about operational plans and hopefully leading to a development of a flagship project to operationalize some in the continent. So that will be in June. And then webinar number 7 will be in July, and this one will be, we will invite a country or countries or an organizations to make a presentation to share experience on what they are doing, what is contributing to the framework for sustainable agricultural mechanization in Africa. That will be in July. And then in August, we will have a discussion paper on element number 3, and that will be focusing on manufacturing, testing, standards, and distribution of agricultural machinery and implements in sub-Saharan Africa. So thank you so much, and over to you, Mark. Thank you.
Yeah, thank you very much, Joseph, for that information. So please look out for the webinars which are coming in the series, so that we continue to share experiences on agricultural mechanization in Africa. At this point, let me invite Adriano Campolina, who is a Senior Policy Officer and Team Leader of Rural Institutions, Services and Empowerment with the FAO Inclusive Rural Transformation and Gender Equality Division from FAO headquarters, to give us the closing remarks. Adriano, please.
Many thanks, Mark. Let me just double check if you can hear me well.
Yes, we can hear you.
So excellent. Thank you so much. And let me start by recognizing our colleagues, Dr. Martin Frejen, Director of Agriculture and Agri-Industry for the African Development Bank, Saidi Nkoma, Executive Director of African Conservation Tillage Network, ACT, our keynote presenters, Dr. Cristiane Strode Martinez, co-founder and managing partner of Joint Co-op, and Ms. Corinna Strombach, senior consultant at Joint Co-op. Our discussants, Dr. Jonathan Agui from IFAD, Ms. Hedwig Silverstein from AGRA, Mr. Jeremiah Mada from TATB Tanzania, and Mr. Masser Diop from LBA Senegal. Distinguished participants, ladies and gentlemen, let me start by thanking all of you who made this event possible, with a special mention to the following: the organizers, AU, FAO, and ACT, for organizing the webinar series and the joint actions in operationalizing the framework for sustainable agricultural mechanization in Africa, FSAMA. Our keynote speakers, the discussants, and our moderator, Mark Flynn. I always in full solidarity on moderating webinars, because sometimes technology can require a special skills from the moderators, and Mark has done it very well. Let me thank you all the participants. We have had more than 200 registered participants from across the continent of Africa and beyond. We now have around 100 participants, and the numbers and diversity are indicators of the interest on the topic. Let me also say a special thank you to the interpreters for your effective and accurate service, and my special appreciation for the AUC for taking the leadership to operationalize the SAMA with the technical support from FAO and secretarial support of ACT through the Africa Mechanized platform. Ladies and gentlemen, financing remains one of the key constraints to sustainable mechanization in developing countries, especially for smallholder farmers. This is true for most African countries, and that's why the aspect of financing for procuring agricultural equipment and machineries and financing for accessing agricultural mechanization service is the second element in the FSAMA, our framework. Ladies and gentlemen, I would like to close by noting some important issues that we discussed today. There are new financing approaches such as leasing, value chain finance, nucleus, outgrow schemes, and direct supplier credits from machinery dealers that are helping smallholder farmers to overcome the challenge of financial illiteracy, lack of collateral, lack of savings, and so on in assessing financing for mechanization. We have also learned of how financial institutions are developing financial products that are sustainable for smallholder farmers. For instance, we have had examples from both Tanzania and Senegal. There is need to focus on the issues or the issue of financing for access to mechanization services, since smallholder farmers may not be in a position to secure the required financing to procure agricultural machinery from their mechanization needs, given the state of the financial sector in most of the sub-Saharan African countries. Information and community technology in communication technologies, ICTs, are enabling or at least improving access and efficiency in the provision of mechanization services, but have limited outreach for application remote areas due to the lack of sufficient grid and ICT infrastructure. The speakers gave examples of best practices, but these need to be adapted and scaled up for enhanced outreach to smallholder farmers on the continent. The public sector has a role to play in creating an enabling environment whereby financial institutions are able to commercially lend to the farmers, and where the farmers are able to borrow and profitably invest in mechanization inputs in order to secure increased timeliness in agricultural operations, such as land preparation, planting, harvesting, and transportation. It will enable farmers to achieve more stable or possibly increased yields, incomes, and livelihoods, and enable them to pay back their loans. Let me just make a comment here in relation to the role of the public sector to support and to advance the risking strategies and programs. There has been a wealth of experience, including in Africa, of de-risking schemes, and I think combining this discussion of finance to sustainable mechanization with the overall de-risking of finance to agriculture is absolutely crucial. The team, you have seen the name of the team that I lead in FAO. We do have inclusive rural finance as part of our work, and we are part of the Improving Capacity Building Rural Finance CABFIN in collaboration with IFAD, FAO, GIZ, PMZ, UNCDF, the World Food Program, and the World Bank. In this alliance, we really work together to develop knowledge and also to improve capacity building across the sector on finance. And I think combining those communities, the community that's more focused on finance for sustainable mechanization, with the community that has an overall approach to agricultural financing, I think is quite crucial, and I see a great opportunity here. Let me also say that financing it should be not only focusing on the mechanization demand, encouraging the farmers to invest in mechanization, but also enhancing the supply by developing financial products for manufacturers, importers, higher service providers, digital actors, etc. It is a holistic approach. It has to take into account both the demand and the supply. Ladies and gentlemen, thank you very much to all of you for attending this webinar on the promoting innovative financing mechanisms for agricultural mechanization. Under the leadership of the EU and the technical support of FAO, we have the all-inclusive FSMA Africa Mechanized Platform. It is aiming to enhance sustainable agricultural mechanization knowledge management, information sharing, network, and partnerships in Africa. This includes facilitating comprehensive analysis of past some experiences, making conclusions and availing such analysis to all countries in Africa to inform the development of a more positive approach to mechanization. Please join the next series of some webinars and events under the Africa Mechanized Platform, webinars, website, newsletter, magazine, journal, and social media. Be part of this effort, share your experience and link to practitioners and experts on SAMA in the continent. With these remarks, it is now my pleasure to declare this webinar officially closed. Thank you very much, and I wish you an excellent day.
Thank you very much, Adriano. Ladies and gentlemen, thank you for coming, and the webinar is closed. Have a nice day wherever you are. Bye.
Thank you so much, Mark. Thank you, colleagues. Thank you, everyone. Yep.
Thank you very much, everyone.
Thank you, Christian. Thank you, Corina. We appreciate it.